Singapore's labour market growth slowed in the first quarter this year, according to the Manpower Ministry's latest report. While the figures have yet to reflect the potential impact of US Liberation Day tariffs, MOM says firms are taking a measured approach for now. Let's take a look at the latest numbers. Now, total employment rose by 2,400, down from 7,700 in the previous quarter. Both resident and non-resident employment continued to grow, but at a slower pace. Resident employment growth was uneven across sectors. Sectors like health and financial services saw gains versus declines in professional services and infocom. As for unemployment, it inched up to 2% overall. For citizens, the unemployment rate ticked up 0.2 percentage points from December to 3.1%. Residents too up slightly to 2.9%. Still, MOM says this is still within the usual range for a healthy economy. That is especially seen as job vacancies rose from over 77,000 to over 81,000 in the first quarter. Most industries added job openings, but hiring in manufacturing has started to slow. And it seems that might be the case for the rest of the year. Hiring sentiments have softened across the board, except in a few sectors like professional services, reflecting a more cautious approach amid ongoing economic uncertainty.
We expect this caution to continue and hiring demand to moderate further, especially with the impact of the US Liberation Day tariffs, which were announced just 2 months ago in April. Notwithstanding the ongoing uncertainty, I want to reassure everyone that there are still good job opportunities available, and this is especially in the growth sectors.
Dr. Tan adds that a task force is set up to support businesses and workers affected by the US tariffs is reviewing further measures to help them navigate the uncertainty. Focus areas include supporting fresh young graduates in the job market and improving workforce productivity. Caitlin Ng with more.
Chanel Chan is one of the young minds at the forefront of Schneider Electric's long-term transformation plans. While the firm is keen to bring in more early career talent like her, it's taking a more measured approach to hiring in light of economic uncertainties.
So one of the key worries, although there might not be as many jobs that are growing in the market just now, good talents are always sought after. We have been going on a digital transformation journey, on an AI transformation journey, right? Which means we need the skill set in this space. But I believe many companies are also looking for the same skill set, which means that competition is going to be intense.
With a new pool of fresh grads set to hit the labour market from next quarter, the Manpower Ministry says it wants to help them by increasing access to job attachments.
We also want to make sure that whatever opportunities that we put up do not end up cannibalizing what opportunities are already available out there for our fresh young graduates. So we will take a very calibrated, a very measured and a very nuanced approach to not just supplement but to complement fresh young graduates coming out looking for jobs.
As for how the US tariffs could hit employment, Dr. Tan says his ministry is ramping up the pace of upskilling and retraining in preparation for disruptions to come. Despite that, one analyst says there are signs that the job market could start to improve.
The delay in tariffs, public markets being on a high, which indicate that there is an appetite for more companies to go public. China and US announced that they are, reaching a deal, so the details are pending, but I think that will definitely impact the job market in a positive way. And with a slightly weaker USD, APAC results for firms that have, let's say, significant revenue coming from countries like Singapore or in SGD will reflect better at a global level.
Still, he cautioned that both employers and employees should be prepared for continued prudence amid persistent global uncertainty.